Americans are feeling increasingly better about inflation. Consumers expect inflation to sit at 3.1% a year from now. That's a big decline from last month's 4.5%. That's according to the latest consumer sentiment survey from the University of Michigan. Yahoo Finance's Josh Schafer joins us to break it all down. Josh.
Pretty good vibe in the economy right now,
That's
right?
all
What up,
I wanted.
Josh? And I feel like that fits the vibe that we got from some of the data today. A little upbeat Friday, right? And it really, you saw the markets turn up on this inflation reading here for consumers, what they're expecting. And I think that's because you saw the lowest number since March 2021, 3.1%. Pretty low, obviously, considering last month they were expecting 4.5%. Now, this is obviously based off inflation data that we've already kind of seen, right? They're digressing the CPI data and the PCE data that markets had already taken in. But I think overall, when you think about sort of what the consumer sentiment data normally means, is it's a good sign for the Fed, right? Because you want people to feel like prices are coming down.
Well,
Jerome Powell talks about that.
I mean, prices are self-fulfilling, as we
Right.
know, both to the upside and the downside. If you think prices are going up, you're going to be willing to pay higher prices. If you think our prices are going down, then consumers are going to put a lid on what they're willing to spend and keep prices down.
Right, and so you want people to believe that inflation is actually going to be coming down, especially when you look at this survey also does the long run inflation, right? 5 to 10 year. That was at 3.2% last month. That's down to 2.8%. So in the long run, people also see inflation coming down, which again, overall just good for the outlook. And then I think broadening this out, and we think about the labor data that came out before the market opened and we didn't see stocks up, then we saw this sort of combined with that to create this nice little soft landing narrative for us.
Yeah.
You've got jobs still growing, right? Like, yes, the labor market's cooling, but overall people are still employed. 3.7% unemployment rate. No one would argue that that's not incredibly low. And inflation coming down. That's what the Fed wants, right? They want us to be employed and they want us to pay less for things, Josh. That's the overall goal here.
I think the point you brought up too, Josh, because you're kind of spinning ahead, because people are starting to think about what does actually consumer spending look like in 2024, which was interesting because you kind of sifted through all those earnings reports, right? And I mean, I think that was really a theme was not recession, executives weren't talking about that, but again, across multiple sectors and industries, you heard, well, we're getting more cautious about the consumer. But then to your point, Josh, you look at, this relatively positive sentiment reading, you look at the jobs report, jobs are growing, wages are growing, inflation's cooling, and you begin to understand why investors are starting to think, it's rare, it's tricky, but maybe the Fed sticks that soft landing and consumer spending is actually sort of okay next year.
Yeah.
We're not sort of, I was just going to point out too, we're still far away from that, right, too? And I think that's the other takeaway we need to have from today, too, is yes, we're talking about soft landing today. You have an inflation print on Tuesday, and we could be talking about a hard landing, right? And you have a Fed meeting on Wednesday, and then things can start to move quickly here, too. And that's one of the things that a lot of economists were warning about today. Yes, soft landing right now, but you still have people projecting the unemployment rate might go up to 4.5%, and then these kind of sentiment readings will shift a lot, right?
Just to, Josh, just to put the numbers you were giving us in some perspective, I thought it was interesting. Peter Bukvar, well-known, economist, strategist, mensch, really, I think we can say. Peter pointed out to his clients that the index is still 30 points below where it stood in February 2020 because that 20% pop in the cost of living is measured by CPI. And it was just kind of interesting because we talk a lot about, the numbers are better, but sort of the doom and gloom kind of feeling that some people have. Interesting perspective.
And we're significally off the pandemic lows too, right?
Yeah.
So now we're kind of in this middle ground of can we
Yeah.
get back to what it was before the pandemic?
Yep.
Normalization. That's been the word for a while. All right, Josh Schafer, thank you so much.